What I'm about to tell you is not theory. It's not motivation. It's a system that will make it mathematically impossible for you to stay broke if you follow it. Every single day. I spent years struggling with money, working hard, earning decent salaries, and somehow always feeling like I was drowning. I would get paid, pay my bills, spend on things I thought I needed, and end up counting days until the next paycheck. I thought the problem was my income. I thought if I just earned more, everything would change. I was wrong. The problem was never how much I earned. The problem was what I did with what I earned. The problem was that I had no system. I was making financial decisions based on feelings, on impulses, on whatever seemed urgent that day. And feelings are terrible financial advisors. Today, I'm going to give you the exact system that changed everything for me. The same system that works whether you earn $30,000 or $300,000. The same system that turns any income into growing wealth instead of disappearing expenses. If you apply this every single day, you will never be broke again. Not because of luck, because of math. Pay attention to every word. Most people fundamentally misunderstand the difference between income and wealth. They think these are the same thing. They're not. They're almost opposites in how they function. Income is what you earn by trading your time, your salary, your hourly wage, the money that arrives because you showed up and did work. This money has a ceiling. There are only so many hours you can work. There's only so much any employer will pay for those hours. And the moment you stop trading time, the income stops. Wealth is different. Wealth is what you own. Assets that exist independently of your time. Things that grow while you sleep. Things that produce money whether you work that day or not. Wealth has no ceiling because assets can multiply. The system is designed to give you income, not wealth. Think about it. Your salary is calculated to keep you functional. Enough to pay rent. Enough to eat. Enough to maintain yourself as a productive worker. But not enough to become free. Not enough to stop needing the next paycheck. Your employer needs you to need them. That's the arrangement. I know people earning six figures who are broke. Not poor, broke. They make more money in a month than some people make in a year, and they have nothing to show for it. Why? Because they converted all their income into lifestyle instead of assets. Big apartments, nice cars, expensive dinners. They look wealthy. They are not wealthy. They are high-income broke people. Meanwhile, I know someone earning $50,000 a year who is genuinely building wealth. She doesn't look impressive. Modest apartment, basic car, simple lifestyle. But she owns things. Index funds growing every year. A small rental property generating monthly cash. An emergency fund that lets her sleep peacefully. She's building freedom while the six-figure earners are building obligations. The difference is not income. The difference is understanding that income is just raw material. What matters is what you build with it. And this requires a fundamental shift in how you think about money. Most people ask the wrong question. They ask, how do I make more money? This question keeps you trapped. It focuses on trading more time for more dollars, more hours, more effort, more exhaustion. And even if you succeed, you just have more raw material that you'll probably waste the same way you wasted the previous amount. The right question is different. The right question is, what do I own? Until you own something, something owns you. Your landlord owns your housing security. Your car lender owns your transportation. Your credit card company owns your flexibility. Your employer owns your time. You think you're independent because you make your own choices, but your choices are constrained by obligations to everyone except yourself. Depending on a paycheck means renting your life from your employer. They let you live in your life as long as you keep showing up. Stop showing up and watch how quickly everything unravels. That's not ownership, that's tenancy. The path out is ownership. Owning assets that generate income. Owning investments that grow without your attention. Owning skills that multiply your value. Owning an emergency buffer that protects you from shocks. When you own these things, you stop renting your life. You start actually living in it. But shifting your mindset isn't enough. Knowing you should build assets doesn't make you build them. Understanding the importance of ownership doesn't create ownership. Knowledge without execution is just entertainment. This is where most financial advice fails. It tells you what to do without giving you a system to actually do it. It relies on discipline, and discipline is unreliable. I tried discipline for years. I would decide to save more. I would commit to investing. I would promise myself to stop wasting money on things I didn't need. And it would work for a while, maybe a week, maybe a month. Then something would happen. A stressful day, an unexpected expense, a tempting opportunity, and discipline would collapse because discipline requires constant decisions. Every dollar that arrives forces a choice: save it or spend it, invest it or enjoy it. Each choice depletes willpower. Eventually, willpower runs out and you default to whatever feels good in the moment. This is why I failed repeatedly despite knowing better. Not because I was stupid, not because I lacked information, because I was relying on discipline instead of building systems. Systems work differently. Systems don't require constant decisions. Systems automate, systems structure. Systems remove the mental friction that causes discipline to fail. You decide once how money will flow, then the system executes that decision automatically, repeatedly, without needing your willpower each time. Wealthy people are not more disciplined than you. They have better systems. Their money moves into investments before they can spend it. Their expenses are structured so overspending is difficult. Their financial life runs on automation, not daily choices. They built the machine once and the machine runs itself. This is what I'm going to give you. Not advice that requires superhuman discipline, a system that works even when your discipline fails, a structure that builds wealth automatically if you set it up correctly. The foundation of this system is what I call the 20-60-10-10 structure. These numbers change my financial life completely. They will change yours. 20% of every dollar you earn goes to growth. This is non-negotiable. This is the money that builds your future, investments, assets, skills that increase your earning potential. This money is not for spending, this money is for multiplying. 60% goes to essentials, the actual cost of living your life. Housing, food, utilities, transportation, insurance. The things you genuinely need to function, not the things you want, the things you need. 10% goes to stability, your emergency buffer, the money that protects you from financial shocks, the fund that prevents one bad month from destroying years of progress. 10% goes to enjoyment, guilt-free spending on whatever makes your life worth living, entertainment, experiences, small luxuries. This isn't waste, this is sustainability. Without this, you'll eventually snap and blow everything on an impulsive binge. 20, 60, 10, 10. Memorize these numbers. They will govern your financial life from now on. What makes this structure powerful is that it works at any income level. If you earn $2,000 a month, 20% is $400 toward growth. If you earn $20,000 a month, 20% is $4,000 toward growth. The percentages scale, the structure stays. I've seen people try to build wealth without structure. They invest when they remember, they save when there's extra, they spend whatever seems reasonable. This randomness guarantees failure. Some months they make progress, other months they lose ground. Over years they end up nowhere. Structure prevents this. When you know exactly where every dollar goes before it arrives, you stop making emotional decisions. The system decides, you just execute. But the order matters as much as the percentages. Most people pay everyone else first and themselves last. Rent comes out, car payment comes out, utilities come out, groceries come out, entertainment comes out, and then, if anything remains, they think about saving. Usually nothing remains, or so little remains that it seems pointless. This order guarantees you stay broke. You're treating your future self as the lowest priority. Everyone else gets paid from your income before you do. Your landlord builds equity while you build nothing. Your car company profits while you stay stuck. Your entertainment budget is protected while your investment account stays empty. Reverse the order, pay yourself first. The moment income arrives, before you can touch it, growth allocation moves automatically to investment accounts. Stability allocation moves to your emergency fund until it's full, then essentials, then enjoyment. This order changes everything. You build assets before you can sabotage yourself. You protect your future before you serve your present. The money is gone before impulse can claim it. Automation makes this foolproof. Set up automatic transfers scheduled for the day after you get paid. Don't give yourself the chance to decide. Don't give your weak moments power over your strong decisions. Automate and forget. I resisted automation for years. I thought I needed to control every dollar consciously, that I was smart enough to make good decisions in real time. I wasn't. No one is. Even financial professionals automate their personal finances because they know that human judgment in the moment is unreliable. Now let me tell you exactly where the growth allocation should go. 20% of your income is significant over time. You need to make it work as hard as possible, but not recklessly. The approach should follow a risk progression. Start safe. When you're beginning, when you have little buffer, when losing money would devastate your progress, keep growth allocation in low-risk vehicles, high-yield savings accounts, government bonds, stable instruments that won't lose principal. The returns are small, maybe 3 to 5%. But you're building the habit. You're proving to yourself that you can do this. You're accumulating enough that the next step becomes possible. Then add market exposure. Once you have a base, begin investing in the broad market. Index funds that track the overall economy. The S&P 500 has averaged roughly 10% annual returns over the long term. Not every year. Some years it drops significantly, but over decades it grows. This is where most of your growth allocation should eventually live. Invest in yourself alongside financial markets. Skills with high income potential might be the best investment you ever make. Coding, sales, copywriting, marketing, financial analysis, skills that employers pay premiums for, skills that can generate freelance income, skills that multiply what your time is worth. Every dollar spent on genuine skill development can return hundreds. Consider real estate exposure without the hassle of landlording. Real estate investment trusts let you own property passively. You buy shares like stocks. You receive income from rents collected across commercial and residential properties. Diversified exposure to real estate without fixing toilets at midnight. Individual stocks can play a role but require discipline. Long-term ownership in stable companies you understand, not speculation, not gambling on price movements. Actual ownership in businesses you believe will be worth more in 20 years than today. Diversify across sectors. Don't bet everything on one company no matter how confident you feel. High-risk opportunities exist but demand caution. Online businesses, digital products, cryptocurrency, gold, alternative assets. These can produce extraordinary returns. They can also produce total losses. Only allocate money you could watch disappear without derailing your financial life. Understand what you're buying. If you can't explain it simply, don't buy it. The ladder of risk should match your situation. Someone with nothing can't afford to lose anything. Someone with a solid base can accept some volatility for higher potential returns. Move up the ladder as your foundation strengthens. But remember something critical. Knowledge doesn't build wealth, execution does. I know people who have read 50 books on investing and own nothing. They understand compound interest perfectly. They can explain diversification in detail. They know exactly what they should do. They just don't do it. Knowing the system is worthless without following the system. Every day, automatically, without requiring motivation. This is why automation matters so much. You don't need to feel motivated to build wealth if the building happens automatically. You don't need to make good decisions every day if you made one good decision once and automated its execution forever. Set up the accounts, schedule the transfers, build the system once, then let it run. Now I want to address something that traps many people. The belief that saving more is the path to wealth. Cutting expenses has limits. You can only reduce so far before life becomes miserable, and the mental energy spent squeezing pennies might be better spent increasing income. Wealthy people focus on earning more, not saving more. They invest in skills that command higher pay. They position themselves for opportunities that generate multiples of their current income. They think about expansion, not just preservation. This doesn't mean ignore savings. The 20-60-10-10 structure requires discipline on the expense side, but within that structure, energy should flow toward growing the income number, not obsessing over micro-optimizations of tiny spending categories. Someone earning $50,000 and saving 10% accumulates $5,000 yearly. Someone earning $100,000 and saving 20% accumulates $20,000 yearly. The second person isn't more disciplined. They're more valuable. They focused on becoming worth more and the math took care of the rest. Increase your income and maintain the structure. That combination produces exponential results over time. But while you're building income, stability protects you from catastrophe. 10% going to your emergency buffer might not seem exciting. It's not growing aggressively. It's not building glamorous assets. It just sits there liquid and boring until you need it. Then it becomes the most important money you have. Financial shocks happen, job loss, medical emergency, car breakdown, family crisis. If you have no buffer, these shocks force terrible choices, liquidating investments at the worst possible time, taking high-interest debt, abandoning progress to survive. Your stability fund prevents this. When shock hits, you access the buffer without touching growth assets. Your investments keep compounding while you handle the crisis. The temporary setback doesn't become permanent destruction. Calculate your target. Total your essential monthly expenses: housing, food, transportation, utilities, insurance, the minimum you need to survive without income. Multiply by 5 or 6 months. That's your stability fund target. Keep this amount in liquid accounts, high-yield savings, money market funds, accessible within days, not locked up for years. Once you reach the target, redirect that 10% to growth. Your buffer is complete. Now all excess can multiply. I've experienced what it feels like to face emergency without buffer, and I've experienced what it feels like to face emergency with 6 months of expenses set aside. The difference is not just financial, it's psychological. The security changes how you think, how you decide, how you sleep. Build the buffer. You'll understand when life tests you. Something else destroys wealth silently. Something that gets almost no attention because it feels like success. Lifestyle inflation. You get a raise. Finally. More money coming in. You've earned this. You deserve better. Nicer apartment. Better car. More expensive dinners. Upgraded lifestyle across the board. A year later, you're broke at a higher income level. The raise disappeared into expanded lifestyle. You're earning more but keeping the same, maybe less. This is how 6-figure earners end up with nothing. Every increase becomes a lifestyle increase. The gap between income and expenses stays the same no matter how much they earn. They're running faster on the same treadmill. Wealth comes from widening the gap, not matching the gap. When income increases, lifestyle should increase slower, ideally much slower. The difference flows to growth allocation. That's how wealth builds. 2 categories of spending destroy wealth faster than anything else: housing and transportation. The apartment you don't need to impress people who don't care. The car you finance to signal success you haven't achieved. These 2 categories can consume 50, 60, 70% of income if you let them. Guard these categories ruthlessly. Live in less house than you can afford. Drive less car than you could finance. These choices feel like sacrifice in the moment. They feel like freedom later. Wealth is not about appearances. Wealth is about options. The ability to say no. The ability to take risks. The ability to walk away from situations that don't serve you. The person in the modest apartment with investments growing quietly has more freedom than the person in the luxury penthouse owned by the bank. The 60% essentials cap forces these decisions. When you cannot exceed 60% on necessities, you must find ways to meet needs without excess. Smaller housing, used vehicles, shared costs, creative solutions. This constraint feels limiting at first. Then it becomes liberating. You realize how little you actually need, how much spending was social pressure disguised as necessity, how much freedom exists on the other side of apparent sacrifice. And the 10% enjoyment allocation prevents the misery that leads to blow-ups. Systems that demand pure austerity fail. Humans need pleasure. We need enjoyment. We need things to look forward to. Denying this leads to eventual rebellion. You'll maintain strict discipline for months, then implode and spend everything on some compensatory binge. 10% for enjoyment prevents this. It's built into the system, guilt-free, already accounted for. You can spend this money on whatever you want without sabotaging your progress. I use this allocation for experiences more than possessions. Research consistently shows that experiences provide longer-lasting satisfaction than things. The dinner with friends, the trip somewhere new, the concert that becomes a memory. These produce happiness that outlasts the purchase of another object that soon becomes background. Possessions also create obligations. They need maintenance, storage, protection, replacement. Each possession becomes a small recurring cost in money and attention. Experiences have no maintenance cost. They exist only as memories, requiring nothing from you after the moment ends. Spend your enjoyment allocation intentionally, not on impulse, not on whatever catches your eye, on things that genuinely improve your life satisfaction. This conscious spending creates more happiness than mindless consumption ever could. When you put all of this together, something remarkable happens. Your growth investments compound. 20% of every dollar invested consistently over years multiplies. The market's long-term average returns transform modest monthly contributions into substantial wealth. Not quickly, not dramatically, steadily and inevitably. Your skills compound too. The abilities you develop increase your earning capacity. Higher earnings mean larger contributions. Larger contributions compound faster. Your human capital and financial capital grow together. Your stability fund protects the compounding. When setbacks happen, you absorb them without liquidating growth assets. The wealth you've built keeps building while you handle temporary problems. Your enjoyment allocation maintains sustainability. You never feel deprived enough to abandon the system. Small pleasures along the way make the journey bearable and even pleasant. Following this structure consistently makes staying broke mathematically impossible over time, not because of luck, not because of extraordinary income, because the system generates outcomes. It doesn't depend on perfect decisions. It doesn't require superhuman discipline. It just runs day after day, transforming whatever income you have into growing wealth. I want to tell you what wealth actually provides, because most people misunderstand this too. Wealth is not about luxury, not about showing off, not about having more stuff than other people. People who chase wealth for these reasons often end up unhappy even when they achieve it because these goals never satisfy. Wealth is about freedom, that's all. Freedom in different forms. Freedom to say no, to reject work you don't want, to leave situations that drain you, to refuse requests that violate your values. Without financial independence, saying no is terrifying. With it, saying no becomes a calm exercise of judgment. Freedom to take risks, to try things that might fail, to pursue opportunities that excite you but can't guarantee outcomes. The person living paycheck to paycheck cannot take risks. Every decision must be safe because failure is catastrophic. The person with wealth as a buffer can afford to swing boldly. Freedom to work because you want to, not because you have to. This transforms the entire experience of work. When you must work to survive, even enjoyable work carries underlying stress. When you choose to work, because the work matters to you, every day feels different. Daily execution of this system builds these freedoms quietly. You won't notice it at first. The monthly investment seems small, the progress seems slow, nothing dramatic happens that makes you feel wealthy. Then years pass, you check your accounts and realize you've built something substantial. You face a situation where you'd usually feel trapped and realize you're not trapped at all. You have options, you have flexibility, you have the freedom that money provides when it's actually yours rather than owed to everyone else. This is what doing this every day creates. Not overnight transformation, not dramatic windfalls, steady accumulation that eventually becomes undeniable. The people who will be wealthy 10 years from now are not the ones who found some secret opportunity. They're the ones who built systems today and followed them consistently tomorrow and the next day and the next day after that. 20% to growth, 60% to essentials, 10% to stability, 10% to enjoyment. Automate the transfers, remove the decisions, let the system run, increase your income when you can, resist lifestyle inflation when you earn more, invest across appropriate risk levels, build the emergency buffer, spend enjoyment money intentionally on experiences that actually matter to you. None of this is complicated, all of it requires consistency. The gap between knowing and doing is where most people fail. They understand everything I've said, they agree with it, they intend to implement it, and then life happens and intentions dissolve, and another year passes with nothing built. Don't let that be you. Set up the system today, not tomorrow, not when circumstances improve, today. Open the accounts you need, schedule the automatic transfers, commit the percentages to writing where you'll see them. Take the first action that makes the system real instead of theoretical. Write in the comments what your first step will be. What account will you open? What transfer will you automate? What percentage split will you implement? Making this public creates accountability. Accountability increases follow-through. Share this with someone who needs it. Someone living paycheck to paycheck despite earning enough to build wealth. Someone who works hard and has nothing to show for it. Someone who feels trapped by financial circumstances they don't know how to escape. You now have the system, the structure that turns any income into growing wealth, the approach that makes staying broke impossible over time. What you do with this knowledge is entirely your choice. You can understand it and do nothing. You can intend to start and never begin. You can wait for better circumstances that never arrive. Or you can implement today, build the system today, start becoming someone who will never be broke again starting today. The only difference between you and financially free people is not income, not luck, not intelligence. It's whether they built systems and followed them while everyone else just understood what they should have done. Build the system now, follow it tomorrow, and every day after that. That's how you will never be broke again.